Hi, welcome to Wealthy Mindset. My name is Oliver. Thanks for watching. I really appreciate it. I hope you're having a great day. In today's video, I'm going to cover BlackBerry stock starting from May 10th trading day to May 21st. I'm going to analyze the graph, give you the lows and highs, essentially price target predictions. And a disclaimer first before I begin, I'm not a financial advisor. I'm not a professional. And everything I do share with you is just my opinion. It is not advice. So please do not buy or sell based off the information I give you or the opinions I do form. Please do your own due diligence and research before buying and selling. I do own shares in BlackBerry, been holding for 6 years, so I'm a long-term investor overall. Now looking at the graph, the question is, are we going to go lower or did we finally reverse the upside? And we closed at $8.48 as of May 7th, 2021. The stock technically looks like it's in good shape, but I believe in the third last video I posted, I mentioned that if we break the $8 price point, we could bounce at $7.99, $7.98, which is what we did, or $7.97 or $7.96, and then go up to the $8.50 range. And the unfortunate part is I've seen this in the past where we could still come back down to that level and then test this level again. That's the only unfortunate part. So we did do that right now. We bounced up to the upside, hit that range roughly around that price point, 850, 863. The next week, we could potentially come back down, and I hope we don't do that. And I'll explain why that is a potential scenario. Now, we could go up to the upside, and I'll explain why we could also go to the upside. And I'm optimistic, but it could just be because I own shares in BlackBerry, though. So keep that in mind. Do your own due diligence and research, and do not buy and sell based off what I share with you. Form your own opinion, and so on and so forth. Now, if we break 796, we'll pretty much drop down to the 770 range relatively quick, in my opinion, because there is support between 796 to 770 range. The unfortunate part is it's not massive amounts of support. That's the only problem. These are all horizontal support, by the way. Now, another reason why we potentially could be going lower, before I cover why I don't think we will potentially go low as well, is the MAC line. In case you're new to the channel or unaware what the MAC line is, it is the moving average in terms of like the direction of the stock. Is it bearish or bullish, right? So right now it's in the negative, it's bearish, it is not optimistic. It looked like it was recovering because it was a lighter shade of red, which if that's the case, it starts recovering and means it's going to cross over to the positive, become bullish, and then it would be optimistic. Unfortunately, it reconfirmed that it's moving in a bearish movement because it became a darker shade of red, like the solid shade of red, and it means that potentially there could be more downside. The reason why, too, is this downward trend resistance line right here, dating back since the high of January 2021, and has a touch point right here, second touch point right here, and then technically looking for a third touch point, or could just continue down. Now, this upward trend support line could hold. So what could happen is if you don't want to take a massive risk, I would say wait until, if you're trying to average down or trying to enter at the lowest price point or just enter for the first time and all that stuff, I would say wait until end of the week, or at least wait until May 17th or the next trading day. But to make sure, I would wait for either the end of May 17th week or the week after. That way you know the full direction, because there's 3 situations that could happen right now, or 3 possible scenarios. So the first scenario is we're right here right now for the graph. We could, for the stock, we could break up to the upside right now at any time. So that is a scenario or a potential play. Another play we could have is we could go up to like $9.12 or $9.50 and then get knocked back down and then bounce off the support level and then meet at May 17th and then break up to the upside at one point. So that is another potential, and that would solidify this upward trend support line right here that we bounced off on March and then had touch points from July to August. And by the way, this is 2020, and then December of 2020. Now, yes, we had a false breakout, so there is a potential for another upward trend support line, but that would be potentially the last one, and I'll elaborate on in a future video. But there is a chance we could break through it, and that is the third scenario where we could still hit 950. So to make sure we're fine, I would say if you want to take a low risk, at least hit the 1030 range, and I'll elaborate more on that as well. But we could hit 950, get knocked back down as well, or $9.12, 913, 914, and then get knocked back down. And then probably by May 17th as well, be still doing fine around the $830 price point, give or take $8, and then break down on May 17th. Now, it won't drop necessarily that drastically or anything, but I could see it dropping down to 770 at least. And if it drops down, we'll assess it more in future videos and cover the lower levels. Now, that is a scenario. The reason why I stated that, again, like I said, is because I've seen in past history of BlackBerry where breaking the $8 price point is unfortunately not good, and we could test it again. And given the MAC line being a negative. Now, there is hope that this upward trend support line could hold because we're still above it right now in the 5-year chart. We're above all three moving averages, long, mid, and short, the 200, 150 day moving averages. And so far, it's okay still. It's potentially okay, but it's risky though. That's the thing. Now, if we go to the 1-year chart, which I haven't adjusted the lines for, so this is going to be the 5-year chart lines. But if you technically look at the 5-year chart upward trend support line right here, technically this is like pretty amateur, but it bounced off a couple times here, it bounced off here in January, and then bounced off recently. So technically, if you think this bounce off is legitimate, and then technically if you can imagine a downward trend resistance line right here, which I'll move the 5-year chart for you because I'm not going to use it anymore, which I'm just drawing, I guess. But while I'm moving it, basically if this downward trend resistance line does break, so you could almost see it right here where it touches a bunch of touch points. Again, this is just quite amateur, bounce off of support, resistance, resistance, and resistance right here. You would have to break it, but again, I'm going to elaborate why breaking at the low levels could still indicate a false breakout, but maybe there wasn't that many false breakouts. Well, actually there was right here, but it didn't start anyway until here. So maybe a false breakout won't be a false breakout and actually be a real breakout. So again, depends on your risk tolerance. If you want to enter at these levels, it is quite risky, but at the same time, I guess with the risk comes bigger rewards. But again, it is risky though. That's the only issue. But either way, I digress. So if you think it's going to break this bounce off the support line is legitimate and it's going to test the downward trend resistance line and actually break through, then I would say it would be pretty confident to at least break the 950. It could be a false breakout. I don't know. So basically you would have to break the $9 price point, I think. That would be really more reassuring. But then you could see right here, the 950 plus the moving average right here could knock you down around the 950 right there. So it almost reconfirms the $9 price point as well. Plus with the 1-year chart at the $10.11 could still knock you down too. That's why I'm going to explain why the $10.30 price point, and it's going to be more specific. It's more specifically $10.37. You have to pass that to be more comfortable that yes, now we're starting to go to the upside. Now going to the 1-month chart. So this is where it's going to get more specific as to the next few trading days. So if you've seen my videos in the past, you've noticed that I've talked about this downward trend resistance line right here that acted as support back in January 25th, 2021, and then had a couple touch points here as well, but then acted as resistance in mid-March right here, got knocked down twice, and then plus this downward trend resistance line right here multiple times where it had knocked us down March 26th, April 8th, and April 14th. Now, the game plan earlier was to pass this downward trend resistance line dating back since January 25th, 2021. We did pass it, and like my last video I stated that if we pass it, we could potentially have either a false breakout or we could hug this downward trend resistance line, which we pretty much did. Now, the unfortunate part is we formed, as we were coming down, another downward trend resistance line, and not even just that, all three downward trend resistance lines and the market, I believe, was down on May 4th and got knocked down. So you had like a trifecta of all three moving averages meeting at, or downward trend resistance lines, all three of them meeting at one point, plus the market was down. So before we could even fully open, we were just getting like knocked down completely, and it was just pretty bad. So it was pretty horrible, and just coincidentally just perfect timing to everything meet at the right time, unfortunately. Now we went down to making a support level. So here's a touch point, here's a touch point, and it wasn't quite strong yet because it's only 2 touch points. We went up to the upside, didn't necessarily get knocked down by the downward trend resistance line since January 2021, but we did go down below before getting up to it fully. Came down, bounced off support right here, and then had quite a bit of touch points. So 1, 2, 3, 4. Unfortunate. I think markets were down on this day. I can't remember. I apologize. I should have looked it up. But then broke through it and then went up to the upside, bounced off support somewhat right here. You can see, and now we're here. So that was just like a recap. So far, looking pretty decent. But again, even though we are at the 850 range, I would say approach with caution a little bit. It is quite risky, but at the same time, it looks pretty decent where there is, looking at the 1 year chart, there is a potential that bounce up could be legitimate. And going back to the 1 year chart, I just want to show one more thing, is the MACD line was bullish. It was optimistic during this like phase right here, but right now, yeah, like that bounce off, it has a negative right now and is bearish, but it is trying to cross over to the positive and be a bullish movement. So I removed that downward trend resistance line right now, recently, just right now in the red. But if you imagined it and it's going to be bullish, there's a chance that it could break through it. Again, risky still, nonetheless, but there is a chance. Now going back to the 1 month chart again one more time. Because we passed the downward trend resistance lines and the moving average right here, the short one, and now we got knocked down by the mid-range one, and we're going to bounce off, we bounce off a support right here with this resistance line right here, then there's a chance we could still continue to the upside and pass this moving average right here, and then test this moving average right here at 873, 874 price point. And I'm going to elaborate more. Like always, I'm going to cover the upside and the downside. I'm going to first cover the upside, and then I'm going to cover the downside later in the video. Now, the MACD line right now, at the moment, is in the positive, and it is bearish for the 1 month chart. So these all change based off the chart you're looking at. So for the 1 month chart, is it for like in terms of relation of the month trading? Is it moving in the bearish movement or bullish movement, so on and so forth, so like that. So in the 1 month chart, it's moving bullish, and it looks like it could be crossing over to the negative and be bearish and not optimistic. But in my opinion, I think it looks like it might be bouncing off and continue on the bullish movement and go to the upside again. So that's potential, and it could be true, but nobody knows for sure. So we'll see what happens. We'll know more on May 10th trading day. Today's May 9th, that's why. So if we go to the upside, so now what we're looking at, we're going to have resistance at the 850 price point range, obviously between 851 to 856 mainly as well. Then we're going to have resistance at 869 to 871. Now, also, by the way, the 850 range coincides with this moving average right here. So it's going to be quite difficult to pass the 850 range, possibly. We could probably get knocked back down. I know I'm going to cover the upside, but I just want to mention this one thing just in case. In the next trading day, relatively quick too, we might get knocked back down to the 840 price point range, which is what we have support at 841 to 840 price point anyway. So I could see that happening and then bouncing back up to the 850 range, and then maybe having difficulties to pass it again. Hopefully pass it, and then pass the range overall, 851 to 856, 850 overall, even 859. Then we're going to have issues at 869 to 871, like I mentioned. Now, even if we pass that, we might actually get knocked down pretty roughly, because we have 873, 874 resistance right here with this moving average. Now, it's not a guarantee we will get knocked down like we did here. The moving averages don't always act as resistance or support, but they could, like we noticed right here, and other times I've showed in the videos where they could act as support as well and resistance and stuff. So once we pass the 870 range overall, we'll have issues at the 880 range, mainly 888, 882 to 884, and then 889. Now, I'm going to go through all these resistance levels, but there's the very last one is the most important one in my opinion, because all these ones are just basically temporary, and they're going to look optimistic, and to me they're not guaranteed that we're passing all these resistance levels that I mentioned in the 5-year chart and in the 1-year chart. I want to pass all these levels to make sure that we're fine in terms of the moving average as the 1-year chart as well. So I'm just going to go through them quickly, and then I'm going to get to the most important one. So after the 880 range, we have to pass 895 to 897 and 891. I know I read that backwards, but we have resistance at those levels. Then yes, $9 automatically have resistance anyway, but between $9 to $9.13, $9.14, we've seen that quite a bit, quite amount of times, like a good amount of times. And then we have resistance between $9.27 to $9.37, mainly between $9.27 to $9.31. Now the next range is pretty significant. That's the $9.50 range and the $9.63 range. So the reason why I say that, I've seen that multiple times in the stock in the past alone, but just looking at recently between March 31st to now trading days, like current trading days, then we've seen that we've gone up to 950, 963 and all that stuff, or 962 to be exact. I don't think we hit 963 exactly. It was 962, but we just basically went up to 950, 960 range and then just got knocked down, and 950, 960 range got knocked back down. So passing 950, 960 is pretty important, and that would at least indicate we're in pretty good shape where we could start going to 988 to 983 range, give it like plus or minus a couple cents between that range. And still, I personally don't think we're in the green to go full throttle. We'll still have issues at 995 to 999, and then yes, $10 automatically the clean dollar price point. But the low tens, so in the past I've seen, if you look at the graph on the left side, I believe it was within, I should have checked the actual date and then shown you. I'll probably show it, I could probably show it right now. So let's see at the 5-day chart. I think it's right about here. Yeah, so you could see right about here, I think there was in a couple, so you can see a touch point right here where it hit like the low $10, got knocked down. So went from $7 almost to $6.92 to $10 and just got knocked down still. But this is different. This was a 2-year downward trend resistance line that I've talked about in my roadmap video, I believe, for the stock. And right about here, you can see resistance right here around the low $10 price point. Went up from $9.71 to $10 and then just kept on going down. Now this was a different type of movement, but still there's resistance at the low $10. So even if we hit the low $10, don't necessarily think that we're in the clear fully. That's the reason why I'm mentioning the $10.30. So we have resistance between $10 range, the low $10 range, 10.02, 10.05, 10.11 to 10.15. Once we pass that, and we have to pass this range, so we're going to be meeting resistance at 10.27 to 10.37. Once we pass the 10.27 to 10.37 and start heading to 10.44, 10.54, then I think we're in the clear. Again, this is just my opinion, not advice. Nobody knows for sure, but I think we'll start like, yes, now we're in the clear, reversing to the upside. Now, technically, you could enter before that and expect to go to the upside before that, because given the 5-year chart, if we see signs that we're actually bouncing up to the upside, the 1-year chart breaking the downward trend resistance line, all that stuff, then you could like enter like prematurely and be like, yes, I think I'm taking a good amount of risk. Like, this is not necessarily a massive amount of risk and I'm fine with this amount of risk that I'm taking. Now, to cover the downside though, it's not necessarily just going to go to the upside and we're fine. This is going to be awesome if we do. Again, I do own shares in BlackBerry. I hope that does happen. But there is potential, like I stated, with the 5-year chart and all that stuff I mentioned, breaking the $8 price point, hitting $7.98 and all that stuff, there is a chance we could go to the downside. So if we go to the downside, what's going to happen is we have resistance at the 850 range price point overall, plus this moving average could knock us down. Like I stated, we'll have support at the 840 range and 841 to 840. But then we have support at the 830 price point, plus the support of this moving downward trend resistance line that could act as support as well, by the way, which is the 840 price point, depending on when we meet it though, because the longer we take to meet it, the lower it goes and it'll trickle down to the 830 price point. So maybe the 830 will be the lowest technically, but then we could rely on this moving average right here at 829. Depending on when we meet it, it could be a little bit lower, a little bit higher, so on and so forth. So 829 could be support as well. So 830, 829. And then we're going to have support at the 820 price point range, plus or minus. Like, I didn't mention specifics in these ranges, but just because there's just too many. So we could hold up at the $820 price point range, $8.10 range. But more specifically, we'll trickle down. If we do trickle down dramatically, we'll hit, actually before we get to that. So again, the moving average, like I stated, but then I think this upward trend support line, even though it's not necessarily steep, could hold us. And if that's the case, we're looking at, because we saw a bunch of touch points right here. So this does exist, but it is not strong because it did have a false breakout. It was tampered with in a way, if you think about it that way. So it doesn't necessarily guarantee a strong hold, but it could happen. And if that's the case, there's support at the $8.19 plus or minus a couple cents, and could bounce up on the upside. So essentially probably $8.20 by the time we get down to it. So we'll see. And like I stated, $8.10. More specifically, if we start breaking through these levels, we'll see $8.06, $8 again. Hopefully we do not break $8. If we don't break $8, think we're in good shape. Technically, again, we could bounce at $7.99, $7.98, $7.97, between these ranges, $7.96, all that stuff. If we break $7.96, I would be more worried. Can we bounce up to the upside at like the $7.80 range? Yes, we can. That's possible. But I think we'd see $7.70 range. More like, if you want more specifics, it was like $7.97, $7.77, $7.75, $7.74. But hopefully that does not happen. Hopefully it goes to the upside. Again, that's because I own BlackBerry stocks. So again, I could easily be too optimistic. So keep that in mind. Do your own due diligence, research before buying and selling, form your own opinions. Do not buy and sell based on what I share. Now, a little bit of fundamentals too. In terms of stock, the stock could do well over, like, I'm optimistic for the long term because of a multitude of things. But I've noticed cyber attacks have been increasing. That's not a good thing, but for business wise, more companies are going to be aware of these cyber attacks when they are happening more frequently. And because of that, they'll take more precautions. So recently, as of May 8th, 2021, top U.S. fuel pipeline operator shuts whole network after cyber attack. So that doesn't mean that's going to be more business for BlackBerry. Like, they're not going to necessarily go to BlackBerry. But if more companies are aware that, because what happened in the past was companies didn't necessarily have to protect because there was a lot of cyber attacks, but not everything was connected in terms of networks. But now things are getting more connected with networks in terms of connected to the network. Then they're more accessible and more prone to attacks, right? So given that, companies are getting attacked that we're not necessarily thinking that they would ever get attacked, because who would attack some of these networks? They're technically, hypothetically, not necessarily considered important until they do get attacked and you realize how important they are. So that's the thing. So more awareness brings potentially more, makes the market cap, or not market cap, the market overall for the cybersecurity side bigger. And then technically some of them could be going to BlackBerry, so then drives up more revenue and all that stuff. Now for the stock too, the number of shares shorted has increased a little bit more too. Now I'm not saying that this is a massive amount of shorted positions. When a company is considered shorted a lot, it's when it's at over 20% shorted. Right now it's only 9.15% shorted, and this is only in terms of floated shares, which is to me I think it's more important than outstanding shares. Outstanding 7.87%, but the reason why I'm mentioning it is it has increased by 1%, I believe a full percent, because it was at 8% before, 7.98 or something like that. And the reason why that's important is because we've been going down rough for the past few trading days, and for the past 2 weeks or 4 weeks it increased 1%, which is pretty massive overall. So in terms of floated shares, we have how many floated shares? Probably should have looked that up specifically. So we have 510.85 million shares. So 1% of that is quite a bit. That's if my math's not incorrect, that's 5 million shares. So that's still a good amount of shares to be shorted in terms of float, if my math is incorrect, or if my math is correct. And so again, not massive amounts of shorted position, but it could be significant enough where we've been seeing that down. Like they've been shorting at the right time to knock us down at the right time. That's all. Okay, so that's it for the video. Thanks again for watching. I appreciate it. Hope you liked it. If you did, consider dropping a like. It does help with the video. Comment down below if you have any questions. Do not hesitate to ask. I'll try to answer them as soon as possible. Apologize for the delay lately. Been busy with work, so I apologize for that. And if you like videos like this or other stock videos or other financial videos, mortgages, credit scores, passive income, financial freedom, all stuff, I will be posting those in the future. So consider subscribing so you'll be notified when those do come out. And that's basically it. Thanks again for watching, and I'll see you in the next video. Peace.